Okay. Today, I went online to buy a course. It was pretty affordable, but the problem was I couldn't ask questions. And of course, as soon as I bought the course, I realized it wasn't even in video format. It was in a PDF. That's the crappy thing about buying stuff online sometimes is you want to ask questions, but no one's there to give you answers. So I found another course. I did the same thing. There was no live or no one I could ask questions to. They said just email. And of course, I got an email back. And you know what the email said? They sent me a couple links. Watch these videos. But it wouldn't answer my question. Is the course in video content? Imagine buying a house. Imagine not knowing what you need to know, but no one wants to answer your question. And of course, if you want to ask someone a question, then of course they're trying to sell you. And that's the last thing you want to do. So tonight we have Ask a Loan Officer night. If you have any questions that's holding you back or giving you any type of uncertainty about home ownership, tonight's the night to ask. What's going on, guys? My name is Min Win with What's a Mortgage. Welcome to our channel. The goal of our channel is to simplify home ownership. If it's your first time tuning in, do me a huge favor. Hit that subscribe or notification button so you are notified every time we go live or post new content. We go live every Monday night on Facebook and YouTube at 8 p.m. now. After 7 years, we finally made our Facebook YouTube live at 8 p.m. I am getting old, so I will fall asleep like at 9:15, 9:20. So we're doing it earlier now, so appreciate everyone who logged in earlier to watch us. Also, if our video brings you any value, please do me a huge favor. Like this video and please share it with someone you know that is interested in home ownership. So I'm going to ask a couple questions, but if you do have a mortgage questions, bring it on. Oh, we already have questions. Let's get into the questions really quick here. Mark Albano from Facebook. We are thinking of buying. I got Mayweather syndrome, so my reading's not that good, so be patient with me. We are thinking of buying a new development house that wouldn't be ready until January 2024. We are putting 5% down. When would we actually have to pay the 5% and the closing costs? Mark, typically when you're buying new construction, they're going to ask for a copy of your bank statement showing that you have all the money for the down payment, closing costs, and any reserves if reserves is required. Typically, you'll give a deposit. Your deposit check could be about 1% of the purchase price or whatever you can negotiate. The rest of the money is due when you sign escrow, and right before they fund your loan, you will have to wire the money for the down payment and your closing costs. Hopefully that helps you out. So not until January. All right. I got a question from Destiny. Looking to purchase a new home. Should we do 15% down and buy out the PMI? I suggest if you're buying new construction, I would probably put 10% down. I probably wouldn't go for the full 15. If you do 15% down, you will still have PMI. It might be better that you put 10% down and use maybe 1% about the PMI, saves you 4% out of pocket. Also, depending on the market you're in, you might be able to get the seller or the builder to cover your PMI buyout. Another trick. So after after this week, there's a law that comes out in May, but all banks are applying the law now. So the bigger the down payment on a conventional loan, up to about 30% down, you're actually going to pay a higher interest rate than buying with just 5% down. So Destiny, I would probably buy the home if your debt to income ratio is under 40%, put 5 or 10% down so you get the lower rate, and 60 days after you've made your first two payments, then I would put the rest of the money down so you can now get your lower payment because the balance is lower. They'll recast the payment, but you'll at least get the loan with a lower mortgage rate. If you come in with a bigger down payment first, you will pay the higher interest rate. Hopefully that helps you out. Nicole from YouTube, do you think more houses will be on the market in the spring and summer? So of course, Nicole, we've lost about another 38,000 homes. So there's about 577,000 active listings in the United States, not counting pending sales. So if rates don't come down, people won't sell. Most people who have a mortgage have rates probably in the fours, maybe low fives, maybe threes. They're not going to sell their home for rates above 6% because the cost is not worth it to upgrade. So when rates do pull back, or when they pull back, Nicole, people will be more excited and more motivated to sell their home. And when they do that, then we'll see more inventory. But also remember, Nicole, we will also see more buyers, because if rates pull back, more buyers will enter the market. Hopefully that helps you out. What's up, Bodaderm Mo USA from Facebook? How to buy a house for a rental without using cash. FYI, we have our primary home only. So if you don't want to use cash, you can pull out a line of credit on your property. So you're taking a loan out on your property to put a down payment on the rental property. Typically, it'll be 15 to 25% down, depending if you're going to go with a single family home or a duplex, triplex, or fourplex. Hopefully that helps you out. Destiny Cone. Why are people with bigger down payments in theory getting penalized? Destiny, this shit is ass backwards. The reason why, and here's my theory, and I think I'm pretty right on this theory. The reason why, and Tanya, I'll get to your question next. I missed that. I do apologize. Because people with bigger down payments have a higher chance of refinancing sooner than later. And they know, I think, rates will pull back eventually sometime this summer or at the end of the year or beginning of 2024. So the banks want to make their money on these clients now. So that's why they're waxing them with a higher rate, because they know they will be able to refinance as soon as rate pulls back. The more equity you have, the easier it is to refinance. Don't you think it's coincident it's only on conventional loan and not FHA? Because FHA loans, you can do something called a streamlined refinance. On conventional, it would be a brand new deal. That's probably why they don't want you to. So if you do refinance, they want to make their money now. That's what I think. Hopefully that helps you out. Tanya, should I buy now with rates so high and refinance later? Tanya, if you are in a comfortable position to buy, and you can afford today's payment, then in the future, there is an opportunity to refinance. But if you are buying a home and things are super tight, I probably wouldn't do it unless you can make some sacrifices where things can still be flexible. I do believe rates will pull back. And with a lack of inventory right now, and sellers aren't forced to sell, and knowing that the foreclosure rate is low, we probably won't see a huge dip in price drops. There might be a minor dip, but to see another huge dip would be hard because rates are so high, sellers aren't willing to sell. If they're not willing to sell, you only have buyers who are trying to make a serious move and they don't care where rates are at. They have tons of equity. But we don't have that many people willing to do that. So to me, I think if you do qualify, it is safe to buy and rates will pull back. Hopefully that helps you out. Mark, if I buy a new development that won't be ready for several months, can I seek out another loan if rates go down? Yes, Mark. If it was me, I would hedge my bets. I would go with the developer and do something called a loan float down. If rates improve, grab the lower rate. Let's say another lender offers you a smoking deal, then switch lenders. You'll lose that money for the float down, but it is worth it. You want to hedge your bets. But I think it will be hard to go with another lender because depending on the builder and the county you're in, and if it's like highly capacity, like there's a high capacity, they probably will fight for the deal. So for me, I would get approved by the lender with the builder, do a float down, and if things improve later on and the builder's not willing to give you the better deal, then go with the new lender. Hopefully that helps you out. But if you go to the new lender, you might lose all your discounts and all the seller credit. Okay, hopefully that helps you out. Victor, hello. So if we do a 5% down and then try to recast later, how exactly does that work? So we take a bigger payment at first when we recast. Yes. So Victor, I would put, so, you can go and look on the loan level pricing adjustments as I showed earlier this morning in our Instagram and our TikTok videos. If you haven't checked it out, go check it out. 5% down has a lower risk adjustment than 15 to 20% down. But remember, if you do a lower down payment, you also risk debt to income ratio. If your debt to income ratio is over 40%, there is a 0.375 hit. Okay, but if you go 5 or 10% down and you only have and your DTI is under 40%, then I would put the lower down payment, and then 60 days later, so you make 2 higher payments, which is nothing. put the rest of the money in, and they will drop your payment. Also, if you pay down the house or if you pay down the house 20% down from the original purchase price, your PMI will fall off as well. Hopefully that helps you out. Bodum Durham again. Do I need to qualify with my current income, or HELOC is fine already? Or we can also say that the bank that the future rent will be breakdown for monthly payments? No, when you qualify for your HELOC, you have to qualify on your current income. Hopefully that helps you out. All right, guys. So let's go to a couple other Q&A questions here. Okay. If you have more questions, please bring it on. Question number 1, very common question. What are the pros and cons on buying a condo? So here are the pros on buying a condo. There's HOA. I think it's a good thing. That means you have someone else upkeeping your home. So that's why I like it. Number 2, I like about condos. Since they're not building more single family homes, condos are moving up quick in price. Also, depending on the condo you buy, you also don't have to pay for hazard insurance that you would pay for a single family home. Those are the pros. Here are the cons. Of course, HOA can move up with inflation. That's number 1. Number 2, if you buy a condo and it's not warrantable, you're going to have to come in with a bigger down payment. Or if it's not FHA or VA approved. If it's not FHA or VA approved, you might have to do something called a spot approval. If you have to go FHA or VA, that may take a while. So since it's not, let's say the condo ends up not being warrantable, it's a little bit harder to sell down the road. It's a great property to one day keep as a rental though. Those are the pros and cons about buying a condo. Hopefully that helps you out. Good, Andy? Okay. Let me see here. Kanza Mitchell. I have my taxes included in my payment. I want to lower it because taxes keep going up. How can I lower it? So you can either refinance in the future. If you have a low payment and you have a conventional loan, you can make additional payments or make a lump sum payment and ask the servicer to do something called a recast, where they will recalculate the payment based on the new lower balance and your current interest rate. That should bring down your payment, also knock years of interest off your loan. Remember, you can only do it on a conventional loan. I've seen some people saying, oh, not all servicers do it. They don't do it because it might not be the program that fits the qualifications of recasting. To recast, typically you got to go with a conventional loan. Hopefully that helps you out. Was that good for Q&A, Andy? Okay. Nick, we are not doing payments today, Nick. If you are considering buying a house for $700,000, please send us a DM, give us a call, 714-790-9697. You can give us a call or send us a message, because on top of $700,000, I would need to know your monthly gross income, how much you're putting down, and your middle credit score. See my fan working? Let me see here. Henry from YouTube. If I gave 3.5, see here. Let me go up here. Henry from YouTube. If I gave 3.5% down and I'm going for 2 years now, can I remove PMI? If you bought a home, Henry, with an FHA loan, which seems like you did, the only way to remove PMI is to refinance from FHA to conventional. That's where a lot of home buyers got stuck with FHA loans because they got super low rate and they got PMI. And now since rates are higher, it's not worth refinancing from FHA to conventional. I would just hold on to it, Henry, if you have a super low rate. Hopefully that helps you out. Sherry, we are deciding between a 2-bedroom and 3-bedroom townhouse, new development. 3-bedroom is $100,000 more, East San Diego. Any thoughts on which way to go? So 3 bedrooms are going to have a higher chance of selling for more in the future. Also, if you decide to turn into a rental, it also will rent out for a lot more. Of course, it's $100,000 more for a reason. So if you can swallow the payment with $100,000 more, the difference of payment should be about $900 a month, about $800 to $900 a month. So if you can swing an extra $800 to $900, it is a good investment to sell the house in the future for a lot more, also to rent it out for a lot more. Hopefully that helps you out. Honey Child, hi Min, not much question here, but want to let you know we are closing this Friday with Pulse. We met you personally in Long Beach, Grace and Ruffy. Oh, what's going on? It's been a forever. The house is in phase 19, 3 more phases to go. Congratulations, Grace and Ruffy. I know. So you bought in phase 3. So of course, as they're selling phase 19, you'll have your 20% equity. So you'll be able to refinance in about 6 months and remove your PMI, grab the lower rate, okay? Because they're going to use new value. Hopefully that helps you out. And congratulations on your home. What up, Anthony? Fook win. Dude, we got all the wins in the house. All we do is win. No matter what. What's better, FHA 10% down or conventional loan with a 20% down? I would probably, even though rates are higher on 20% down, not having PMI. Actually, right now, if I bought right now, I'd probably buy with 10% down FHA. Save yourself the 10% down. And when rates pull back in about 6 months to a year, just refinance it into a conventional loan. You won't have PMI. FHA has a lower rate right now. I would probably go FHA, suck it on the PMI. You're only putting 10% down, not the 20. You'll refinance in a year. It's worth saving that extra 10% down. Hopefully that helps you out. Okay. For the recasting trick, let's say we did the 5% down and you mentioned when we already put the bigger down payment 60 days later, would we just put it into the principal payment from Washington State? Yes. If you're going conventional, remember recasting only works on conventional. When you make the big payment, just make sure you tell the servicer it's a principal only payment. If you don't do that, they will apply some of the payment to interest. Okay. Tricky how these banks work. So just tell them it's a principal only payment. Destiny, hopefully that helps you out. 2 years income still needed for a loan. Any self-employed help? Yes, you need 2 years income. If you're self-employed, you can either go with a non-qualified mortgage or you can go 1 year self-employed tax returns. You have to be self-employed for at least 5 years or longer. Hopefully that helps you out. Henry Sierra, what's the process for a HELOC? If I'm going to get a HELOC, first of all, I would go to US Bank. They got some banging HELOC deals right now, and they get them done quick, and they go off your tax returns just like applying for a loan. Hopefully that helps you out. It is cheaper to get a HELOC than to do a brand new refinance. Sherry Lapadding from Facebook. I know it's a good to shop lenders, but our first was with Navy Fed for a conventional fixed rate is allowing us to get our loan with no PMI 5% down. Could there really be a better one? It's a good deal if you can get it. So typically it's 5% down, no PMI. It's lender pay PMI. It's rolled into the interest rate. So you definitely have to make sure the payment is less than going 5% down with PMI with another lender. So that's what you got to verify, Sherry, before you go ahead and take that deal. Hopefully that helps you out. Can I do half FHA and half conventional to cover my jumbo loan? From ERTV, no, you cannot. You cannot do that. Okay. Jumbo loan is going to be 10% down typically. No, you cannot merge it. Hopefully that helps you out. Jerry Ramirez, for rehab loans, what are the terms? You're going to either go with a conventional FHA, VA, or USDA. They all have rehab loans. You still have to qualify for the payments. If you do rehab, you can go 6 months without making payments, but those payments are going to be rolled into the loan. You just have to make sure you qualify, okay? Of course, there are some guidelines on rehab. Definitely talk to a rehab lender and go over that. Hopefully that helps you out. All right, next question, Andy. The next question, what is better, FHA or conventional? Of course, if you have 20% down, conventional is the way to go. But with the new laws and rules changing with the loan level pricing adjustment, I would probably go FHA over conventional. They have the lower down payment, the lower PMI now. You would need, really good credit to get a low PMI on conventional. But now with conventional, with all the adjustments, the rates are a lot higher. So if it was me and I'm not putting 20% down or 15% down, I would probably go FHA, lower rate, lower PMI. So when the rate is lower, when you make your mortgage payment, more money goes towards principal, okay? And also, then when you have enough equity, just refinance from FHA to conventional. If I bought today FHA, my goal is I'm either going to go 3.5% down or I put 5% down and I try to use the seller to pay off my upfront mortgage insurance. So it makes my refinancing easier. So let me say this again. If I had to go FHA today, I would put 3.5% down, try to get the seller to pay my upfront PMI or just pay it off myself, and then refinance later to conventional, okay? Or go 5% down, have the seller pay, and then refinance conventional once there's enough equity. Hopefully that helps you out. All right, next question. Thoughts on mobile homes thoughts about buying a mobile home first. I probably wouldn't buy a mobile home because you don't own the land. I know with the condo, you don't own the land either. It's shared walls. But if you buy a mobile home, you pay for lot space. It's almost as much as buying a manufactured home. But when you try to sell your mobile home, it takes a long time. Let me say it again, a long time to build enough equity in your mobile home to sell it. If you are going to do something like that, a manufactured home will put you in a better position to upgrade to a single family home in the future. Hopefully that helps you out. Okay. Boder, not a question. I would like to thank you for giving us a great information about home buying. Last July 2022, we bought our new construction home. Congratulations! So proud of you. Okay. Thank you so much for supporting the channel. Victor Bustos from Facebook. Hard money loans. I have a client trying to do a flip, but what tips do you have for hard money loans? Oh man, the tip I have for hard money loan, try to find someone that charges you less origination up front. The reason why is because that's pretty hefty cost. I'd probably rather pay a little bit higher of a rate. And before you go ahead and do your flip, make sure you have all your construction lined up. The longer you keep the loan for, the more you pay. I would try to pay less points and get it flipped quick, Victor, so your client can save more money and, you know, be more profitable. Hopefully that helps you out. Okay. Facebook, Setsuku Hirano Kennedy. Wow, like 2 names I can't pronounce and then just Kennedy. I'm kidding. Right. Mad love for you. Thank you for supporting the channel. $420,000 purchase, new home with $200,000 down, FHA or conventional. Any more advice? I would probably go conventional since you got 200 grand. Okay. Since you're putting, you know, that big of a down payment, go with a conventional loan. I would probably just put 20% down, 80,000, and save myself the headache. Then putting $200,000 down though, Setsuko. Okay. Save that money. If you feel like after 6 months or a year, you love the house, you just want to drop the payment, put the rest of the money in and do something called a recast. Okay. Make sure that everything works out well before you drop in the extra money, right? 420, put 20% down, save the rest of the money. You're probably going to end up refinancing later on. When you refi later on, then with the lower rate, put in the rest of the money and you know, you'll get the lower payment. That's what I would do. Hopefully that helps you out. Should I lock 699? Wait till next week. Nalongsak Aogd. You know, there's a guy named Barry Habib. You guys can look him up. He is the Nostradamus or the fortune-telling predictor of mortgage rates. He says this Friday, with the jobs report coming in higher, it sucks. People will have to lose their job for mortgage rates to come down, but that's reality. On Friday, supposedly the job report is supposed to come back bad. Good for lenders, but bad for people who are losing their jobs, and that should cause rates to come down. March 14th, he's expecting inflation to come down lower. I probably wouldn't bank on that because I don't see rates coming down until probably the summer. Right? I'm saying May, June, or July. A lot of people are saying May. I still think May there could be, but looks like July and August or June and July seems like the higher probability. Whatever you do right now, you can refinance down the road, so I wouldn't sweat it too hard on stressing over rate. I would lock as soon as you can. Okay, hopefully that helps you out. Mark Albano, what closing costs are realistically negotiable with a new developer? So you can negotiate all your closing costs and a rate buy down. But remember, Mark Albano, if you are negotiating closing costs, if you are putting less than 10% down on a conventional loan, you can only have the seller pay 3% in closing costs. If you are buying FHA or 10% down on more conventional loan, you can ask the seller to cover up to 6% in closing costs. I think if you're putting 25% down or more, the seller can cover up to 9% in closing costs. Hopefully that helps you out. Jerry Ramirez, if parents want to add you to their loan, will that change the current mortgage rate they have? Yes, it will change that because it's a brand new loan. They can add you to title though. Hopefully that helps you out. Boderm Mo, do you like and why Robert Kiyosaki that likes debt and Ramsey who doesn't like debt? To me, good debt. Okay, there's something called good debt versus bad debt. If you understand how debt works, then it's good getting debt. But most Americans don't. That's why Dave Ramsey speaks to the masses that does not understand how to manage debt. Also, if you're going to manage debt, you better be self-employed. Being a wage earner is not a good idea to manage debt. Being self-employed is amazing to get debt and manage it because all that debt is tax deductible. Okay, hopefully that helps you out. Also, one last thing, I'm not a tax person. Talk to a tax person. That's just my 2 cents. Destiny. Can you can we refer you for a loan help here in Washington, or what states can you specifically help in? Yes, I do Washington Destiny. Please go ahead and reach out to us. Give us a call. Flash number, Andy, 714-790-9697. You can give us a call, send us a text message, or email us info@whatsamortgage.com. Guys, if you have a loan estimate and you need help reading it and beating it, send it over to info@whatsamortgage. We'll read it for you. We'll tell you if it's a good deal or not. If it's not, we will help you find a smoking deal. All right. Hopefully that helps you out. All right. Next question. Up there. What is no, next one, right? Is that, no, there's one on top. One on top. Okay. What is the best tips for buying new construction? Tip number 1, use your own real estate agent. Okay. The reason why, in case you want to back out, in case something goes wrong, in case the builder delays, you want to have your own agent represent you. Also, let's say you have a delay. If the builder agent represents you, they're not going to cut you any slack. Remember, they don't get paid by you, they get paid by the builder. So, number 1, make sure you have your own real estate agent, okay? Number 2, buy the homes in the earlier phases. As I was talking to Honey earlier, she bought phase 3. They're selling phase 19. So, every time they release a new phase, you gain equity. So, let's say you bought a home and you put 5% down on a conventional loan. Okay, she went from phase 3 to phase 19. Every time they release a phase, she has more equity. So eventually, her and Ruff will have 20% equity. If you have a conventional loan, after 2 years, if you have 25% equity, the PMI will fall off. Okay, let's say you have the equity, but it's not 2 years. Rates drop, you can refinance, grab the lower interest rate, and then not have your PMI because they will go off a new value. So those are our main 2 tips. Use your own agent and buy in the early phases. Hopefully that helps you out. Okay. Tanya again, can I use my... Okay, perfect question. Tanya Miranda from YouTube. Can I use my 401k for a down payment? And the answer is yes. You can use your 401k as a down payment. Remember, you can draw out of a 401k 2 ways, as a loan or as a hardship. If you draw out as a hardship, you don't have to pay it back. Anything over $10,000, there is a 10% penalty. So if you drew out $15,000, you would pay $500 on the $5,000. But also remember, when you draw from your 401k as a hardship, let's say you draw out 15 grand, that 15 grand is added back to your gross income to get taxed on, okay? So you are subjected to income tax if you draw as a loan. As a hardship. But if you draw out of it as a loan, you are not subject to income tax, okay? There is a payment plan. There is a payment plan you have to make, but the interest goes back to you, not the servicer. You're not subject to income tax, and there is no penalty. But let's say you took out a loan on your home. Let's say you take out a loan on your 401k and you change jobs. A lot of servicers will take that 401k and turn it into a hardship, and then you fall under hardship rules. Hopefully that helps you out. Let me see here. So yes, I think it's a good idea to use your 401k though. The reason why, let's say you buy a home for 600 grand and it appreciates 3% a year. That's 18 grand a year it appreciates, at least. Will your 401k make that? Most likely not, unless you have a gang of money in your 401k. But to beat a $600,000, you would need 600 grand in your, or let's say you would need about, let me see here, 30. Yeah, you would need about $40,000 in your 401k, right? At 8% interest. But remember, on your 401k, once you retire and you pull money out of it, you're going to pay income tax on that money. When you draw money out of your home in the future on a reverse mortgage, you probably won't. So I like buying a home over just putting money in your 401k. Hopefully that helps you out. What do you think about purchasing a home in the high desert in California? It's popping off. The high desert is popping off. Palm Springs is cooling down just a bit because, a lot of people are selling their Airbnbs, since a lot of people can't have Airbnbs in Palm Springs. But in the high desert, it's popping off right now. Hopefully that helps you out. Okay. Do you have good enough questions, Andy, or you want me to answer any more? You want me to answer the rest of these or no? Are we good? Okay, cool.
Time.
What?
You can finish up the live chat, or you can
Yeah.
go to the question.
All right. Next question. You're welcome, Jerry. Next question, right there. How do you get around student loans when buying a home? So, if you have a student loan and it's in deferment or in forbearance and there's no payment, most lenders will take the balance, times that by 1%, and add it to your monthly debt to income ratio. For example, the average student loan is $30,000, so they would add $300 a month to your debt to income ratio. Okay, if there's already a payment on there, whatever the payment is what they'll add to your debt to income ratio. If your student loan is an income-based repayment, and for some reason you can convince the lender to make it zero, then they add zero payments to your debt to income ratio on a Fannie Mae conventional loan and on FHA. Okay, hopefully that helps you out. No, sorry, I take that back. If your student loan is an income-based repayment and the payment says zero on a fuck, I was right. Mentally, I'm jacked up. Okay, so oh, sorry guys, I'm like getting my guidelines confused here. So that's how I'm getting old. That's why I'm doing social. That's why I'm doing lives earlier. So you have a student loan in income-based repayment, and the payment says zero. If you go with a Fannie Mae conventional loan, or you go with an FHA loan, the payment says zero. They add zero payments to your debt to income ratio. That's how you get around it. Okay. Freddie Mac, they're gonna add 0.5%. VA, they'd use a different formula as well. Okay. See here. All right, got 2 questions left. Okay. Next one, should I sell my house to buy or rent it out to buy? Okay. So, of course, I get a lot of mixed messages depending on who's asking. To me, I would do my best not to sell the house. The reason why, they're just not building more properties. Of course, if you keep the property as a rental, you will be a landlord. But is it worth it? I think it is, because you will have an asset to pass on to your child. Okay. So I think it's worth holding on. But for some reason you don't want to, then sell it. Let's say sometimes it is worth selling it. To me, I would do my best to try to hold on to it. Especially if I can get a home equity line of credit, have the renter pay my line of credit, pay my mortgage as the equity builds up, and I can pass it on to my kid. Not everyone wants that, but if you don't want that, then sell. I think I most likely wouldn't want to sell unless I have to. Hopefully that helps you out. Last question. I just became self-employed. How long do I have to wait to buy? So if you just became self-employed, you have to wait at least 2 years, or you can go with a non-qualified mortgage and put 15 to 25% down, and you can buy after 1 year. Hopefully that helps you out. All right, guys, I really appreciate everyone who stayed, who watched, who liked, who commented. If I did bring you value tonight, do me a huge favor. Hit that subscribe or notification button if you haven't done so yet. Also, fam, please tag a family or friend, family member or friend, or anyone you know that wants to have more certainty in home ownership. All right, guys. Question here, Jerry. Just rent it out and furnish it. Furnish Finder. All right, awesome. All right, guys. We want to end all our episodes with our attitude is gratitude. Thank you guys so much. Facebook and YouTube for tuning in. Also, if you do need to get a hold of us, give us a call. 714-790-9697. Give us a call or email us or send us a text message. All right.